In support of our goals and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point.
A high-stakes Fed meeting delivers a rate cut. Eric Diton of the Wealth Alliance joins us. Eric, the market got the 25 basis point rate cut that it was expecting, but Stephen Miron, Trump ally who was just sworn in, dissented, favoring a 50 basis point cut. What's your reaction?
Very happy that we got that 25 basis point cut. It was pretty much priced in. The market expected it. And the market also expected Steve Miron to do exactly what he did and dissent. He telegraphed it all over the place that he wants at least 50 basis points a la Donald Trump. And he didn't get it. Interestingly, Bowman and Waller, who had previously dissented, did not. They are on board with the 25 basis point cut. So that's interesting. It tells me that Waller and Bowman looked at the data and they're not pounding the table the way Donald Trump is. They're not saying, we've got to get these rates lower in a big way. They're not saying that. And that's why we've got to watch this Fed. This Fed recognizes the weakness in employment, but is not gung-ho on cutting rates. It is watching inflation too and is a little bit concerned.
Would you say that the outcome of this meeting shows that the Fed is asserting its independence amid all of this worry that perhaps it's becoming less independent?
Yes, I think Steve Miron put on the side there for a moment. Yes, I think that I'm happy to say that the Fed looks pretty independent at this point. We've talked about this before. An independent Fed is very, very important, especially as the reserve currency of the world. The world needs to see that we are not manipulated, that we are watching the data and doing what is best for the country.
What new information jumped out at you in the Fed's projections?
The dot plot. We're looking at 1 or 2 more rate cuts this year. The market was hoping for 2. Fed split. It could be 1 or 2. But what no one's really talking about is 2026. 3 cuts were priced in, and the dot plot shows 1. Lisa, that's a pretty big difference. I don't know why the market isn't making more of a big deal over that.
So what do you make of that? What's your opinion on that?
The Fed is torn, that dual mandate. It is clear one of the acknowledgments by the Fed is, hey, employment is taking a hit here. We are definitely slowing down. We are concerned. However, in the same breath, they did note that inflation has moved up. That's a conflicting dual mandate. So I think they're going to be probably more data dependent than ever. They are betwixt and between.
So what does all of this mean for markets going forward?
Everyone likes an easing Fed. If you go back, Lisa, and you look, since 1994, there have been 8 times that the Fed has cut rates within 2 weeks of an S&P high, 1-year high. It's happened 8 times. All 8 times, the market was higher 1 year out, median 14.5%. It's just pointing to the momentum that you get in the markets when you have a dovish Fed. And that is clearly what we have now, given the weakness in employment. Markets like that. It's good for bonds. It's good for stocks.